Okay, hi there, guys. G'day, Lauren. G'day, Pharaoh. Good afternoon. Just let me know if I'm coming through loud and clear. Just never know with this IT stuff and me whether I've got it hooked up right. So, good day today. A big night overnight, wasn't it? G'day, Helen. Are all the big guns in today? Not including me. All right, we'll get stuck into it. Um, Welcome to Trade Setup. We're now the 29th of the 11th, so it's nearly time to put up the Christmas tree, according to my wife. I think we'll be doing that on Saturday, apparently. So, big day for us and the kids. They'll be loving it. They're all excited. She's even got an extra smaller one for upstairs, so that'd be good. Um, for anyone that's new, welcome along. And if you have any questions, just remember you can email us support at tradesetup.com.au. Um, Now, you can hear me, I'm assuming. No one's giving me the thumbs up. I'm always cautious that I'm not going to be speaking to myself. Maybe. All right. All good to go. Maybe. Yeah. Thanks. Thanks, mate. All right. Um, So a bit to talk about. No, nothing major. We've been speaking about same sort of thing on the ASX and what's happening in the Dow. We've spoken about this quite a bit, and they kicked off with a vengeance last night. More, I think, less got to do with the tariffs than and more actually got to do with the US dollar. Well, definitely got to do with the US dollar. So we'll take a look at that. We'll just go over the charts just to see where they're at after last night. I'm probably looking at the futures on the Dow. For some reason, my Spark system's just not popping up with the overnight data. Sometimes it comes about a day or two late, which is a bit of a shame. So anyone that's new, just remember you can see us at Twitter. If you join us on Twitter or follow us on Twitter, top left, Facebook, top right, and bottom right hand corner is YouTube. Subscribe to us at YouTube. Getting through that faster and faster. Let me just there we go. So the overnight markets, we'll start with where we're at the Dow. Oh, sorry, the ASX. We're up 31 points, or nearly 32. We're up a bit higher, obviously, on the open. I think we pushed up to nearly up 40, 50 at one stage, give or take, and just backing off at the moment, which you would expect. So it'll be interesting to see. It'd be interesting to see how we go into the close. Um, if we can tick up into the close, that'd be handy. That'd be good to see. You could see we've spoken about this level pretty much through the 56.50, 57 zone to potentially hold up, at least get some sort of reaction. Now, to start off with, our major concern is that 59.50 that held. So we had this big capitulation. We popped back up, retested. The fact that we popped up quite hard, if it was if we're going to continue to see weakness into the market at that stage, you would have expected to be, about 50% retracement of this leg down from 59.50 to say 56.50, somewhere around 58, and then start to roll over. Just build that lower high and roll over. But instead, so there's two things. It's pretty much, we still got the buyers and sellers fighting out, the bulls and the bears. That bounce there is conducive, a bit more strength coming in, and that's going to be that support zone. Maybe not a line in the sand just yet, hasn't proven anything just yet, but that 56.50 zone to 57, it's quite broad, is definitely a resistance zone where people may start to step in, and we're just waiting to see, look, if that's going to play out at the moment. Got that bounce, which is quite positive, but we didn't break through that 59.50. So the fact that we didn't get through the anchor to the downtrend, and the anchor is just here at 59.50, the fact that we didn't get through that is a bit of a bearish sign as well. It may be that there's more to come. The bears have just let the market tip over. Okay, it's bounced back up. They've let it bounce a bit. They've defended that anchor level. You got some more selling come in. It's pressed it down, taken out that low, which is not so bad. The only thing we need, so at the moment, you can see the bounce was quite strong. What are we on the daily? So it was 1, 2, 3, 4. Some quite solid days strung together in a row. Instead, we've had a couple of green days, a red day, green day, uncertain day yesterday, positive day today. I'm a bit, I do think that this level is going to hold up. I still believe it's going to hold up. We're not reacting as hard on the upside as we did, as say the Dow did overnight. So we are still a bit contained. I think a lot of it's still got to do with, for us in Australia anyway, is obviously commodity prices and what's happening between US and China. Now, I think over the weekend they've got their meeting, if I'm right. I don't know if it's this, they're going to meet up and talk, well, sort of come to some sort of arrangement, or potentially try to come to some sort of arrangement, or get a deal done. Well, it's Friday night or Saturday over the weekend. Anyway, they've got, so by Monday we should find some sort of, either the market's going to drop. Maybe if it's on the weekend and we find out some news over the weekend and nothing's happened, it's probably going to drop on the open on Monday, or it's going to gap up on the open. Because I think that's what's going to really lead this market to be a bit more bullish. Now, the flip side of that, if something happens on tariffs and they ease off on tariffs, they come to some sort of arrangement, it might be bullish again for the US dollar. It all depends, because I think global growth is slowing down. That's what they're concerned about. There's no, with the US dollar, and why we get this big rally overnight was that anyone that's been reading the news, just following the dollar, it's all, they're pretty much not the RBA, the Fed Reserve is saying they're coming in line with their expectations. They're at sort of that neutral level where they're looking to get inflation under control. They contained it. It's not getting out of hand. They're more worried about growth and the downside effects from Brexit, emerging markets. What else was there? There was one other, can't remember. But the headwinds that could still tip the market over, especially at lofty valuations of stock valuations in the US. Now, of course, if they go down, we go down as well. Um, if they're easing off and rate rise, it's going to help emerging markets. So that's not really solved that problem, but we may have factored in and seen the worst. Um, Lower, obviously, no more rate rises, and if the company, the cost of debt is not really going to move too much, so that's going to be a bit of a positive too. So there's still, this potentially with this weakening US dollar, no more rate rises on the cards, or they were going to one in December, potentially two more next year that they may or may not do. I don't think they're going to be whipping them out too fast. That's going to help buoy the market potentially, and we have come off quite hard. Or they come to some sort of tariff arrangement that could easing off in tariffs. We could see. I wouldn't expect that's going to be a big mover, a big driver for further growth, but there's a few headwinds there. Just have to see how it goes. Let's look at the actual charts now. The interesting thing was, this is the Dow futures. Now that was that green candle will push up into the close, I think at 8 o'clock, if you can see that. So that was a good push up into the close, and it hasn't. We have seen the last few sessions where it has backed off between, what is it, 8 o'clock, I'm talking Sydney time, 8 a.m. in the morning when the market closes, and say 10 o'clock when we open. Occasionally when the Dow's had a big night, well, most of the times when it's had a big night, it's dropped in the overnight market. We know they've backed off 100 points or so, which has really sort of contained our open on the ASX, but today it didn't. And you can see that by the actual ASX opened up. When we've spoken about it, I think we've spoken about it before. When you look at where the ASX closed at 4 o'clock, previous session, where the SPY closes, basically the difference is what you're looking at up or down. The difference from where the SPY was at 4 o'clock to where it closed at 8 a.m. was up about 40. So it stayed, and it did open up around 40 and kicked on a bit, I think up towards about up 50 at one stage. And the SPY has gone up into a resistance zone, has backed off since then, probably the last hour or two. But the Dow's actually hold the level. It's holding anyway. So if we go over to just have a look at the dailies now. Whoops, not that. And this is that zone we were looking at. I think it was that zone. I don't know why it hasn't stuck with the support lines. We're looking at that on the futures holding. It was just above, holding this trend line up, and it has bounced off there quite nicely. So really, what we're going to have to evaluate from here is what's going to happen, whether we're going to get, so we've got pretty much a double bottom here. You can mark that up as a double bottom. We've retested that support zone. We're bouncing. We've reacted up off that support. You've got a key level up here, but I'm more for one that's going to hold some higher lows, but also some lower highs and just contract in itself, and potentially a lot of that volatility come out. We maybe looking to see we're getting this sort of secondary move now. We're reacting the same that we did at the start of the year. We made the lows. Just delete that. What am I doing here? So you can see at the start of the year, sold off quite hard, bounced quite hard, come back in, retested the zone, and then you could see the volatility just coming out of the market and starting to hold some higher lows and started to build again until we got this nice sort of more controlled trend back up to into the new highs. Whether we do the same thing, um, there's still a lot of water to go on the bridge, I'd say, and we still might get some choppy price action as whoever's buying it, say the last couple of days in the US, probably going to start to take some profits. I mean, there's still we don't know what's going to happen with Trump and China. US dollar, it's not a give-in, but um, they're potentially not going to look at too many more rate rises after December. We'll have to see how that goes. Again, they're all sort of factored in. Whether it's been factored in, anything comes out of the sidelines, it's going to tip the market back over again. We just don't know. But either way, I like the fact that this is holding that support zone. It's reacted up quite hard. Whether we start to chop around and just, you know, sort of bounce around between these resistance and support before we start picking a direction. I think, like I said, a lot of heat's got to come out of that market first before you're getting the bulls to starting to load back up, looking for a bigger move, not just these intraday swings or these short-term swings between, it pops up and they get straight back out because no one's still willing to hold too much risk in the market over in the US anyway, and pretty much over here as well. You can see going through what's happening over here. Um, it's a struggle to find some nice setups. We've only got 4 positions on at the moment, rather than when things are good, you're looking at we might like to look around 10, but at the moment we've got 4. I think one's down out of the 4, if I remember correctly. BXB, which bounced a bit today, which is good. Um, the other 3, I think, actually maybe one's break even to slightly up now, and the other 2 are up, quite well. But I mean, they went pretty hard, and then they sort of, a lot of them just stopped dead in the water. BXB tipped us in straight back down again. So it is choppy. It's hard to hold on to a trend at, in these kind of markets. So you've got to take that into account when you're trading too. Um, if it does tick off and you get to lock in some gains quite quickly, it's not a bad idea to do it. I mean, if you're wrong and it does tick off, so be it. But I think these kind of markets, there's a higher probability that they won't, and they'll be choppy, and a lot of other people might be thinking to take the gains quickly. Um, if you're up 5 to 10%, say on any one trade. All right, so that's the Dow. We'll look at the E-mini. I mean, there's not much to look at the E-minis. The thing I don't like about the E-mini, sorry, the S&P, is that it has, the S&P can do that. It can break down, hold these support zones, build, and then pop back up again. There's nothing to say it can't do that. Rather than correct down, it can correct sideways, which is done before. This looked like it was going to roll over. Big lower high here, powered through these lows, the previous lows, and then bang, up she goes for the next 3 years or so. But the main thing to keep an eye on, we've got on the S&P, we've got a resistance zone there holding the market down. And it's a bit like the ASX, powered down, uh, probably a 40% retracement of that move down, and then bang, straight back down again. But then it retraced 100% of that move, of that leg down. So to me, when they do that, it's not conducive to a very weak market. Sorry, I mean that's pretty obvious. That's weak, but I mean of further weakness to come. When they bounce straight back to where the anchor level is, and then you've got this falling short, pretty much retesting the lows, it doesn't mean it can't chop around in here and then roll over and you get a really big move lower. We're still waiting for some price action to play out. Generally, after we've got I'll draw it up here. What I'm ideally looking for, actually, let's do this. It's probably a bit smarter, isn't it? Take a snapshot of that. Yeah. Right, so what I'm looking for, you've got your zone through here. We've got our resistance zone up here. We could be chopping around. So we've touched on that zone. There's 2 things that can happen. Pretty much, you could start to hold here. You're getting the bulls starting to get a bit excited, thinking, okay, this is it. We're going to do what we did before. I still think there's going to be another test lower, and then see what pretty much is going to tell us what's going to happen there. Because if it's a stronger market, you would expect to form some sort of high low in here, and then start to show its hand a bit more on the S&P. If you get a higher low, I would expect that would lead to a break back up through the 2840. I mean, it may take some time. like it did before. We had this sort of retracement, double test here, we popped up, pulled back. That was your high low, and then we started to build our way up. That was back at the start of the year. So if we get something similar, ideally that's what we'd be looking for. You want to be working off the high low because that's more confirmation. It's easy. You get these reactive moves. You're always going to get these reactive moves when you got the market's been powering down. Not so much on the upside, but on the downside. They power down. It cleans out really quickly. Everyone's very quick to close a position if they're trying to lock in gains. Um, and just when the market's going down in fear grips, they go down a lot faster than they go up. So the fact that it's come down pretty hard, you're going to get these reactions up when people go bargain hunting, um, whether they're looking for things that are oversold. Yeah, they're just trying to look for that quick bounce, and you've got that. But then it's come back down and retested. So the second time down, when it started heading down, anyone that didn't close out in the first leg is probably going to be getting out. So what it's doing in this big move down, and then the secondary sort of move down, most of the people that wanted to get out are out on the sidelines. Everyone else is probably hands over their eyes and their ears and just sort of trying to hide for a bit, head in the sand and just waiting to see what's going to happen. And have decided to just take it on the chin. And, if it does roll over, I'm not saying that people are doing that, but there's always going to be that group that won't close out. They just determine, no, this is it. And they stick to their guns. They don't like to be wrong. So what I'm trying to say is most of the selling fuel has probably been dried up, and you start to see that when you start reacting back off a second time, that's a lot more confirmation. Double bottoms, double tops, all that sort of thing is some really good confirmation that, okay, we've got our line in the sand, so to speak. It's starting to hold up, but we still need the last piece of the puzzle for me is seeing that higher low. Higher low means people are stepping in at higher levels. They're happy to accept higher prices, meaning the majority of people want to be into the market thinking it's going up, not going down. Still, like I said, still a bit of work to do, but if we get that type of price action, I think that could lead to either a grind up or, some fairly controlled price action back up, potentially up through the highs. We may fall short. You never know what's going to happen from there. All we can do is assess it on the go. But that's what I'd ideally be looking for. Now, let's just get up the ASX and draw that as well, XJO. I've got it here somewhere. It's not very good, is it? Here we go. So the XJO, to me, it's something very similar. You've got this support zone through was about 56.50. I wouldn't mind seeing that kick up a bit more. I've got to admit, it's just these few days that have got me a bit concerned. But all in all, the major structures there is in place, and we're looking to. I don't like that at all. Just 1 second, let me get a better chart. These stupid things. I probably should just pay for it. There we go. So that's our ASX chart. But admit this little pop up here, I don't like the way it's sort of grinding up. It could punch back down and take out these lows. But I don't think the ASX does that. You can see before it did similar type of thing. And if we can get, start to curve up, the ASX can do that easy. I just think we're a lot less mature market than say the US, or a lot less proactive. I guess is the words I'm trying to use. But if it can pop up here, the same type of thing, if it can pop up, squeeze back, and then start to hold higher levels, I think that's going to be a good little sign that, okay, it's probably time to start. If you're putting your list together now of your weekly charts and you think you're going to be in a prime zone to start buying, they're the ones who are going to probably start to set up. And again, I just think it's going to take some time. But if we can build that price action and start to hold high low, potentially after a breakout there, then yeah, I think it could be looking quite good. We just have to see how it goes. Again, we could get a good reaction. We could have a good week or a bad week next week, just depending on what's going to happen with Trump. But first step is that obviously the US dollar, everyone's concerns on the US dollar is probably easing a bit, a rallying US dollar, higher interest rates, higher borrowing costs, all that sort of stuff. All right, so for us, BXB is sort of chopping around a bit, but the fact is it took out that 1060. I think Laurent you were looking at it, weren't you? I don't mind the fact that it just popped up through 1060. I think with BXB, I want to see how it comes how it trades into the close. It's down a touch and it is a bit choppy, and they tend to do that a lot. think the overall market, you've got the weeklies down, but it's holding this higher level. This is what I'm looking for as a higher low, 1025 to hold. The daily's shown some very good signs. Probably a bit early to pull the trigger at 1080, but hey, we're in, we're waiting, and I think the price action at the moment, just because we've just confirmed this higher low here at about 1031, that's confirmed. I'm expecting that's going to start to lift. It may take some time though. Again, if the overall market rolls over, then too bad. Triple T, Titomic is looking good. That, especially today, that little pop up today, we're looking for a partial on that, somewhere around 239, I think it was 239. Just to see if we can book something on that. CAY, it's the structure looks great. That daily looks great, and the weekly, the pressure's on the upside. Just have to see if that daily can play out. We can hold the high low. We start taking out the highs at 26.5, 27, and start to push up to 30 and through, potentially through 30. That's looking good still. RFF, this is one that I'm slightly concerned because it's just struggling. And you can see, and this is how, it's ideally good to use. We'll look at this on the stochastics. And I think I was speaking to someone yesterday, Peter, about the way I'm looking at stochastics. Probably don't need that much there. Now you can see the stochastic had a good rally up, obviously quite strong. Push back down. Stochastic started to roll back up and overbought, and it seems to be, it's potentially struggling around 225, 226, which, and you can see that with the, someone keeps knocking it down. Every time it sort of pops up, there's a big seller sort of comes down, and no one's really chasing it, trying to push it up. It's not getting that euphoria chasing at the moment. And if you go, you flick it down too, so it's taking a bit of pressure out of that buying. If we can hold up here, and there's no reason why the stochastics can't come down, it just stagnates around the 224, give or take, and then it starts to lift again, great. But at the moment, if you flick back to the weekly, it's probably better seeing the weekly. You can see that you potentially, not that I look at it too much, but you got that divergence, that potential divergence. So maybe on the weekly, we're due for a bit of a pullback, build a higher low on the weekly and go. I mean, we just have to see if we can hold in there or not. Not sure how it's going to go. But if we do roll over from here, pull back somewhere around 215, 216 to 220, somewhere in there and start to lift again. Okay, if we can hold up, we're going to stop at 215. Great. If we can't, we'll have to see how it goes. Otherwise, I mean, if we can just pop up through here, I'd love to see it just pop up through 226, 227 and take out this minor 229 low, sorry, high. And then I reckon that's going to go straight up to, we'll be looking up towards the highs at 240. But we'll see. Still be shy to move back into 4. Yeah, watching the close. VXP looking at your chart. It could be a short. I hope not. You're killing me. There we go. Short. Where are you going, Lauren? You are teasing me, aren't you? All right. So that's it. Put in some charts. Anything you want to take a look at? I just want to show you. I just happened to read something about RBL, this red bubble, and we were long that a while ago. Might take a look at oil and gold in a second. RBL, and this is why times like now, very important to know where your risk is, know exactly where your risk is. This is what we were long. I don't know if anyone remembers this. Now let me just go back to show you roughly where we were long, if I can remember. It was somewhere in here. Okay, so I'll draw up where we got long. And I thought it was quite good. And to be honest, I was probably swayed. There was a fund manager that liked it, so that's the only thing they see value. And I keep getting suckered in, I listen to these guys and think, oh, they make sense. Realistically, they could be talking their book. I still got an inkling not to trust them. Fund managers, they're happy to get on any forum and talk it up, and they're probably selling to you at the same time. So, and that's potentially, they're either got completely caned recently, or they knew it was coming. They're just trying to get out by talking it up. I know that's a bit conspiracy theorist, but that's the way I've got to view things. I think it's always good to view things from a negative perspective. It keeps you, I think it keeps the mindset on the safe side, protect on the risk side of things, rather than be completely bullish, going, I'm going to go up to here, I'm going to see that resistance, it's going to kick off, I'm going to make heaps of money, and then you find it rolls over, you haven't got a plan of attack to get out. Always have a plan of attack to get out. It's always harder to get out than it is to, with a loss than it is with a gain. You can just let things ride if it looks strong, because when things are strong, they just tend to keep going, and you don't really get a chance to get out. But when they turn around on you and it doesn't go to plan, you've got to know where your risk is. So I'm saying all that, what we're looking for is this, they had a zone through here, support. You can see it was lifting. I don't think we got long there. It was somewhere around, and we got this lift up here. Then the market started coming down. We've got this inside level at 150. So this is the plan, the trade, and then I think we got in somewhere around 165, if I'm correct. Let me just check. Where am I? 173. Oh, that's pretty crap. 173. So it was up here, break the high. And of course, that was the high. So we took this back on the rise. It was all looking good. We've had this big corrective phase. 3 times a touchdown on that support zone at 140, lifted, pulled back, build your major higher low, and then started to lift again. So we're just looking for, if you extrapolate that out from that leg up, somewhere 40 to 80. If you take it from 50, it goes to about 90. So we're looking at for a potential push up to 90, and ideally up to $2. That's what we're looking for at the stage at that time. And when you got this recent price action, it started to get choppy. You got a couple of good round red days, a green day, and then the next couple of days, if you were looking at that closely, you can see that that's not a good sign. If that was going to be that leg up like we expected, we shouldn't be seeing that price action. We shouldn't have seen that at all. Any pullback should have been well and truly contained. And that's the way I guess you got to look at things. Sometimes you're going to be wrong, but more often than not, it's going to keep you out of trouble and keep you locking in your risk, locking in tighter risk at the right time, and then being able to let it run when things are going good, it's very easy to let it run. It doesn't really pull back, doesn't give you a chance to second guess yourself. But when you see this type of price action, you can see, Greg, these couple of candles here, this is the section we're honing in on. At that stage, you can see that, and then you got green candle, a couple of reds. That for us was, okay, I'm not going to be risking anything below this stop. I'm going to tighten it up. We put our stop at 10,160, and of course got stopped out in this push. It was looking not too bad for a while there, but then you can see what's happened after that. So I think it's very important from a risk management to know exactly where your risk is. And through my years of trading, it's always been more focused on where my risk is, and cutting losses, and being very, I guess, regimental on the way I put my risk and the way I exit, because I think that saves me a lot more. And even when I was learning, it's keeping me in the game rather than taking these big losses and completely capitulating. Your mental attitude just gets destroyed when you know where your risk is and you're not taking these big losses. You're taking smaller losses. It's a lot easier to start building and really working on the other side, because all it comes from there. If you can take a loss good, then you've got to flip it over and say, well, it's about my entries. I've got to get in the right spot. And if I get in the right spot, I feel like I'm getting in the right spot. I'm still taking losses, so be it. But what you'll see is when you start getting the right entry and you start getting a better read on the market, things are just going to get a bit easier. So yeah, I thought I'd pop that up because I only just checked it this morning, and that's completely got nailed for whatever reason. Don't know what the news is, but yeah, that's a great example of knowing exactly where your shorts are. I'm sorry, your risk is for any trade. All right, now, any questions just on those there? I can't think of anything else that we may have had. Just want to check a few things while I'm here. Origin. I'm still kicking myself for missing that short right in here. Look at that, it's still heading south. So that was a breakthrough down for about $8 with a risk at about 8.25. 25 cents, and you made more than $1 before you'd have to probably take half off. Origin, this one's different, West Farmers. What else was there? Oh, there's another short. I just thought I'd show you this. I've got my eye on this. Yeah, look at this one here. We'll draw this up because I think it's worth, if the market does roll over, it's good to have as a hedge some shorts on, potentially some shorts on. Now, I've still got my eye on this one, Metcash. And it probably doesn't, it probably, look, I don't know if you think it's potentially building or not from here. I don't at all. And it's a lot of that reasoning is coming from the weekly charts. Now, if we look at the weekly, reasoning behind this, we've had this good leg up. And then if this was strong, for whatever reason, fundamentals are good, you shouldn't have got that big red candle, like just boom, straight down. And then a couple of greens, bang, got knocked down again. What we've done is the buyers are fighting back here, and we can see them fighting back, edging back up. And you can see the stochastics, the pressure up is, it's slowly increasing, but it's been a, look, for the buyers, it's been a real battle. Um, but the problem is, I think it's all because of that initial breakdown. So just remember, things don't always go in just one wave. It'll generally be two waves. And not everyone runs a stop, a hard and fast stop. Some people just they don't run a stop, and they'll let it play back, and they wait for the bounce, assess the bounce, and potentially get out there. And not everyone has got, can be that nimble either. If you've got some bigger players, got bigger positions, it's harder for them to be nimble and just go bang, put a stop on there because they've got quite a bigger position, and they just swamp the market. So things like that, when you get that straight through support zone, you got that punch through support. Okay, it was extended. You can see from that candle there on the weekly, a big move down from around 370 through $3, got thumped there. And the price action since then, I'm really just looking at that. This is the way I'm assessing this weekly chart. You've got a key level around that 265, say. You've got another key level or a zone up between 3 and 310, which every time it's popped up here, got sold back down. It's grinded back up, got sold back down, and it's had another sort of touch up above $3 and got rejected pretty quickly during that week. And now we're sort of, it looks like we're potentially heading south from here. So I've got this one earmarked for a potential short if things get a bit weak in the US and then drag us, we get dragged lower again. If I'm completely wrong about 5,700 and it gets nailed, I wouldn't mind having a couple of shorts on the cards, because I think if this one, it's struggling to get up when we're having a bit of a bounce, and taking into account all of this price action, this pretty much is a blowout of this leg up. You can see it started getting ahead of itself, and the increase, the steepness of the increase was, well, it was increasing, of the rallies were increasing. And that just can't be maintained. Sooner or later, when it starts going parabolic straight up, it's going to come down just as hard. The fact is, I think that has been the end of this leg up. We're due for a correction. And if this is your first, just take that first leg down, potentially looking for, if that's your resistance zone, for your secondary leg down, somewhere it could be around the $2 or below. Now, if things get sticky on the ASX, this could go a lot harder and faster on the way down. So yeah, that's my reasoning behind on the weekly. Anyway, it's all based around the weekly, and it's really just assessing this daily. If we can get a lower high in here, and the selling holds price from going too much further through 280, 285, that's going to potentially be a lower high. You can pretty much sell it through a break, I'd say, through 260, risk above 285, and just see if you can get that move down to $2. So anyway, I thought that'd be handy, just putting that up there. Now, what do we got? ALU, good on you, Laura. I was just had my eye on that one today, I think. Now, ALU, it's gapped up, obviously. We've pretty much filled that gap. Filled it, filled it a couple of times. Filled it here, and then we've been chopping around. So before we start on the daily, we're looking at the weekly. So the weekly trend is still up. It's still holding. I'd say the anchor's around that $20 mark to that leg up. Got a bit ahead of itself with a push to $30. It's come all the way back down again. It's retraced that move up, that pop. Now, the fact that it hasn't broken through 20, and you can see selling pressure's been consistent and been quite strong. If it was going to roll over, you would expect it to come straight down through the anchor. And generally what I like to see, if your signs of weakness is a push through the anchor, pop back up, and you look for your lower high, okay, then you either get out or, you go short if that's what you're looking for. Especially when you can see that it's gone from oversold to it's going to that overbought region. But when it comes to the overbought and it hasn't broken through an anchor, I view that more as a correction, as just to clean out a few of these late longs. Anyone that's sort of above that 20 mark that bought it late into the trend, maybe bought it just in here, maybe bought it on this day here. Anyone that bought it on that day and was potentially buying it through, looking for it to rise back up and push up through 30 again in this year, say back in September. This is ALU, by the way. I know I've just got to make sure I remember to say what we're actually looking at. We'll draw that up. There you go. All right, so we've got our sort of a key level through at 20. You can see the prices. Okay, so we popped up, pulled back, we popped up. Anyone that bought in here and it started rolling over, potentially being squeezed out, try to go again, touch back down on right back down that 20 mark, reacted up. So I'd take this all as one sort of leg. So you can sort of mark it through that 23 mark, popped up, come back down. It's ever so slightly a higher low in here. I'd call it, I'd probably book that in the retest of those lows or a double minor double bottom just at this stage. But what I'd be looking for from here is obviously that break of 24. It's still got, it could be just contracting. It might just sort of grind up the 24, pop its head through, and then roll over, but not break through this sort of this or break out of that contraction off the 20 mark. So ideally, I'd like to see that's your contraction. I'd like to see it pop up and then maybe edge its way lower and start to build your entry signal or your entry setup once it's out of there. Because if it does pull back there, you're going to get that secondary wave of buying that's going to potentially take it up and start to support the stock and lift it. And then you're buying on the rise. You're not going to be buying when it's edging down into support zone and just hoping. Basically, if you trade like that, you're hoping that it's going to pop up. If you buy on the rise, it's a much higher probability setup, much higher probability trade. Sometimes they don't give you this pullback to buy into, but if they don't, you can just look elsewhere for a trade. Quite easy, really. So yeah, don't mind ALU. Is it Illumina? Altium. Altium Limited. So yeah, I want to see this price action before I start looking to get involved. I think it's in a good zone. You can see this press down from what is about 24 down to around 20. It was a weaker effort by the sellers, and it was getting bought up, soaked up by the buyers. So a stronger effort should have seen it right down into that oversold mark. But instead, you've gone from overbought, not really into oversold, just sort of hit 20% on the stochastics. So it was a weaker effort from the sellers. It got down into that support zone, but you can just sort of interpret it like it's running out of selling pressure. Even though it got down there, maybe the buyers are not too confident. They're not stepping in. They're not new fresh buyers willing to step in just yet. But there's enough just to hold it up. They're letting it pull back into support. Um, but the way I'm viewing that, with that pullback on the stochastics, is more just the weakness in selling pressure, and it's starting to run out. It's starting to fade. So anyone that's wanting to sell, may be thinking twice about it. And then if you bought it in here and you haven't got out and you're starting to see this pressure, the pressure ease on the sell side, even though you're down, a lot of people would just be looking at that thinking, oh, let's just wait. Let's just wait and see what happens. Let's just wait and see. They could be risking that it breaks down completely, but I guess there are a lot of people who would do that. And so that's the way I'm just interpreting that base holding up. But it's not out of the woods just yet. It hasn't shown the signs it's wanting to lift. CGC, well done, mate. You're repeating the same ones. Costa Group. I wouldn't buy it obviously now, but it was mainly I didn't mind the way this weekly was looking. I think intraday I've actually been selling that a lot. Well, weeks ago, not anymore. That was a really good sell as it come off these highs. But now it's obviously turned and it's broken that little. So we don't need to really look at the weekly. So the weekly, it's come off, that oversold zone, off that $6, reacted up off there. So I'd be more looking for this to pull back, consolidate it potentially around the $7 mark, and then go down to the daily for the entry. So I think the way it's pushed down, reacted straight back up, I would take this all as one leg. So it hasn't retested the lows, it's just straight back up. And we're looking, for anyone that's not understanding what I'm talking about, here we go, we'll take that. This is essentially for me, your double top, you've got a bit of a blowout here, resistance zone, it's just a double top up there. The market's come down, one, up, two. So that's your two legs down. And this is all part of one leg. It's broken that anchor to the downtrend. But for me, it's generally when they break the anchor, then you're looking for the first pullback, and you've got to look at this as one leg up, then you pull back. So that's your one leg up. You'd want to see your pullback, and if we can get a minor level to work from, great. So it's cleaned out a few of these buyers on a pullback, consolidated at a key or major high low, and start to lift again. And you're looking so for me, this is a weekly pop up, and so we're just looking for that sort of weekly or that pullback on the weekly. It could be a lower high on the daily. Again, it could be broken down into two moves down. Then you start to look for your higher low, and then see if you can work a leg up. And then the next key level would be right up to $889 to see if you can work it up into that resistance zone, even through. But at the moment, it's the pressure it's taken to get it up to 760 from the buying pressure to lift it. It's going to be running out of steam sooner or later, I would expect. And if it doesn't, okay, so be it. You just miss it. It's the name of the game. So that one, the weekly's on the right side. You're just looking for that daily to start playing out. CUV. Yeah, CUV is a bit choppier, and it's probably the weekly pop up that concerns me. And you can see that strength, bang. I think it's going to take time on the weekly just to clean out. You can see how controlled that's been controlled, and it's just probably mid-year it really took off, which maybe it's still got to spend a few weeks or spend a bit of time just to clean out a few of these buyers. That's potentially held in here. Maybe looking for a chance to get out now because we've got this green candle and a couple of reds. It is still holding that higher low. We'll draw it up on the daily. So on the weekly, this is your higher low on the weekly. Oh, I do that. I hate that. Just get that better. Where am I? So for me, this is your weekly higher low. And as long as it holds that, the weekly is going to be in contraction mode. It's not going to be in a pullback mode. It's just contracting. By contracting, I mean you're holding the high lows, also lower highs. So you can see that contracting in on itself. And it's coming to that weekly point of agreement where as soon as you come to the point of agreement, one way it's going to break. You know it's going to break. You just don't know which way. So you're really just looking for a higher low to work off. As soon as it gets through your higher low, gets through that sort of minor, lower high. And by saying that, I mean we're getting this type of price action at the moment. It's contracting. If you can get something where it breaks up and you know it's coming out of contraction, then great. You know who's going to be winning out from there. And then you're going to be getting a whole lot of other swarm of buyers that are starting to jump in, waiting for that breakout. And it's not your typical breakout where it's popped up, it's pulled back, and you're breaking out through a key high. It's more breaking out of contraction. So we're always the idea with your trading, we want to go from contraction to expansion. Every market contracts. You can look on any time frame, the market will pop up, go into pullback, then pop up. And we say when it's going up, it's expanding. And it's in pullback mode or it's contracting, the price action's contracting. We want to go from contraction back into expansion. So we're not wasting our time holding. I mean, I know you could probably buy it. It can go against you for a while. The longer term trend's up. Sooner or later it's going to come in your favor. But I'm always a big one for not locking up and not wasting your time in a stock that's coming down when you could be into something else making you money. And that's sort of, I think it's just sort of that fine tuning for results to get more bang for your buck, really. So that's why my idea, what Davin's shown me, what Davin trades is looking for, it's the same on the futures, your indices, anything, your currencies, you're looking to trade into expansion when it's on the rise. So you've got a high probability setup. You're not going to take any heat and you're not going to waste your time waiting for it to play out. It's easier watching from the sidelines and you can have your money somewhere else than being and watching it go against you because all of a sudden the psychology is coming into play as well. Or maybe you're wrong, you cut it out, you find out you're right, then you chase it back up again. All these sorts of things can completely, ruin what would have been a nice trade. Yeah, so what am I talking about? I got sidetracked again, didn't I? So yeah, we're looking basically for this to go from contraction here into expansion. We're looking for, maybe a setup like that, which starts to hold, breaks up through, and that's the first time it sort of breaks up through a minor lower high and starts to go, and then you're just really looking to follow it up if you can, back up the resistance. So I think this has still got, you can see there's still, it could chop around between here, it could pop up through this 19 level, you jump in, gets to 20, then rolls over again and comes back down to 17. So you could get chopped around. That's why it's important just to know exactly what's happening on the bigger scale. And I think for me, the daily looks okay. I mean, that action, as long as these high lows hold, I think it's going to go up, because it's the weekly one that I think just needs to do a bit of work. Clean out a few more late buyers, just put them back on the sidelines and ready to jump back in when they're proven right again. All right, that's CGC. That was CV and Hub 2. Me too. Probably tell I've had a few coffees. See that one. I think I do like. I mean, overall that price action is okay. I don't think anything wrong with the weekly. But what gets me, erring on the side of caution, is one. It's just this market. I want to see more prime setups in markets like this, like what we're seeing now. I don't think this is a prime one. I mean, it does look good, because what you've got is this press up. It got ahead of itself here. That was the first time it's gone into contraction, but really on the weekly, your anchor level was way down around, say, give or take around the $10 mark. Okay, so it's pressed up, but we've come back down to $10. Okay, you can see that move down. That's your two moves out, and we've straight back up again. This chopped around a bit, and it's sort of come back down, but it's ideally, you'd say that's a higher low. So things are starting to play out all right. That's sort of, for me, you break up out of contraction. We've got a higher low in here on the weekly, and ideally, I don't like that fact. I mean, if you brought it through 14, I wouldn't hold it against you. You'd stop would want to be around the 12 mark. So ideally, 14 to 16 is your one-to-one. But getting 16 is a push through the highs. And that you've got to be right. I'd rather get a 2-to-1 where I'm not looking for a push through a serious resistance zone, especially when it's overextended. Well, it's potentially getting overextended like it is on the buy side. So if it's overextended here, the last time potentially was when we were way up above 15. It could be the first cracks appearing. It could be struggling. I know that trend looks okay. I would like to have seen a bit more work done around here before it started to lift. And it's probably today. I mean, this could get knocked on the head. Don't get through 14 and then roll over back down to 1350. A couple of days, it comes back down to 1250, chops around a bit, and then starts to lift in a couple of weeks. But really, from a technical point of view, that price action is still there. You can just see how it's getting a bit choppy to what it's been in the past. On this leg up, the candles weren't too big. The volatility was lower. It wasn't expanding. It was just a constant sort of, and then you get that little pullback, pop up, pullback, pop up. Until now, we've got this good run up, bang, 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 bang. After a few weeks, straight up. And then we started chopping around, and it's deeper corrections, or the big corrections, big candles, more volatility. So I'd rather see the volatility come out, and then if you get through resistance, you might see the volatility expand, but when it's going in your direction. So back to the daily, I'll just make that the best fit. Yeah, you can see it's probably a lot clearer. This pullback here, a good sharp rally, bang, straight back down again. Back down to test 10, and it's pretty much turned on a dime, straight back up. So, I mean, you couldn't have bought that. I mean, I wouldn't have, personally. I like these sorts of setups when they, pops up, pulls back, you get a clear high low. The first initial thrust up has taken out a few of some key sort of resistance zones, pulls back in, sits on top of the MAs, and then starts to lift. And then you could easily buy that through well, that would have been a nice one just through, what was that, 1150. And you got the bulk of this move up before you had to take something off the table. But these kind of moves, it really didn't show any sign, and this is more contractive price action. It's just whether or not this is what you're looking for. I just don't like the way it's chopped down, straight back up. It's still whippy. So I just think there's potentially some better price action to look at. But ideally, I mean, even if you're looking at that daily, if you bought that through 14, was it 14, smack on 14 today, the high, bought it at 1402, for instance, you'd have to have your stop at somewhere around 12 to 1225. This low has to be there. But like I said, if you've got a $2 stop, I'll say $1.90 stop, you're still looking for a one-to-one around the 16 mark. Does that make sense? And then, is that a high likely trade, especially when the daily is still hovering around overbought, weeklies are overbought, we're potentially going to struggling around 14. I mean, the structure looks great, but looking at stochastics of this pop up here, I would be inclined to be that push through 14 to be more of a washout, and it could have a correction. I mean, who knows? We'll just have to wait and see. But you're right, Laurent, to have that one on the cards. It's just what sort of risk you want to throw at it. All right. So I guess that's it for Hub. Has anyone else got something you want to quickly look at before we potentially call it a day? Oh, look at that. We're getting a bit of a pullback on a few of them. Down 20. So this market is just grinding lower. Don't like the way it's grinding lower, to be honest, especially after the last few days. By now, it would have popped. It would be grinding back up. Probably had the reverse. So that's, look, I know a lot of what I'm saying is more just speculation, but I don't like the fact too much that the US is holding the highs. We're not selling off. No one's coming straight back into it. Look at the last 5 minute chart on the. See, it's banging around here, and this was that pop 755. So it closed. Red candle there. So it closed somewhere around say 25, 340. It's only 320, so it's only dropped really 20 points since it closed at 8 a.m. I mean, that could be strength. It could be chopping around here and then boom, up we go again tonight. Who knows? NCM, we'll look at that, Peter. No worries. So I'm a bit of a conspiracy theorist. I don't like the fact that it's holding. I just think it's going to hold its highs. Anyone that's bought it up yesterday, chased it up, any of the bigger boys might be looking to edge back out, and we might get some selling pressure tonight, or maybe going into the weekend because we still don't know what's going to happen with Trump and China. Two, I guess, very strong-willed, strong-minded leader of China, or China and Trump. It's going to be interesting to see how that plays out and how it's going to affect their market come Monday. Let's look at Newcrest. Yeah, I've had this on the cards for a while. Not really anything to do with this daily. I mean, the daily is still holding a downtrend. You can look at that. It's your high, push down, pop up, double top, retested that, started to fail, pop back up. Potentially, we're doing the same thing around 2150, and we're going to fail and take out this low at 19. If you flick it down to the weekly, I'm probably flipping that around. I'm more bullish, except for the fact that this little pop up here is taking a bit of energy. And if it was bullish, it should have gone. There shouldn't have been too many sellers standing in the way, holding the price down. Does that make sense? So it's probably a lot what I think we were speaking about this yesterday, Pete. Let me just get it. Where am I? Here. So this is ideally what that contractive phase, and this is after we've had this big leg up, big push, push down. This is, I mean, if you take that across the lows there, I don't put too much stock because it's still looking like it's contracting. I mean, you could just about do that. Well, there you go. So maybe that's what we're looking at. Who knows? But either way, you can see price contracting, some higher lows in here. Oh, sort of a retest of that zone. It keeps popping down. It failed around that 19, straight back up again, but it still hasn't broken up. You want to ideally see, I think, that sort of the key level is just above. Mark that up a bit nicer. Say 2250, give or take. You want to see it. If it touches 2250, it's essentially broken out of this contraction. I'd ideally like to see it pop up, maybe work its way back down again, and then that's going to be your higher low to start working from, and see if you can work from that higher low, and then buy it on the rise again. I think the fact that this has taken since 2016, don't forget, this little popped up middle of 2016, started contracting, so that phase started a couple of years ago. If we get a breakout, I mean, people love Newcrest. If we get a breakout, it could be quite strong, and we could easily get a move straight up and through the highs at say 27. Look, it could be a short. I just think it's that point of agreement. I mean, if it's a short, look at it in reverse. You'd want to see it touch down around 1850 and just flip that over. So shorts, whoops. I'm more bullish on this than anything else. I just like the fact that leg up, contraction, potential leg up. If it's going to be bearish, let me draw that. Get rid of all this. Going to be bearish. Say we come down onto that. That's this leg down. Push down. We're back up. I'd like to see it come down and then maybe do the reverse pop up, and then you get your lower high. As soon as we've broken that level and we get a lower high, it's just a sign of more pressure to come. And ideally, we push down out of this contraction. We haven't touched back on because we've touched it here. We can come back down. And if you're going to short it and we come back down and touch, what is it, around 1950, and then bounce back up. And it could, if you go short before it's broken down out of this contraction, then it could be just a sucker play. Sucking in a few shorts, squeezing back out on a pop. So just could be wary, if that makes sense. So ideally, I'd do that move down here is this move. Okay, so that's what I'm looking for. I'll probably draw that up clearer. That's your first leg. Draw a different color. This here is this here into this support. Okay, so that's what I'm looking for. And then potentially a pop. And if it starts to build again and it breaks down through there, then yeah, I think that's going to be pretty much breaking down out of this contractive action. And there, it's come to that point of agreement. Bears are still winning. Bears are in control. The bulls are giving up, and it's going to roll over. And then from there, it's you've got to look to start picking some levels where it could fall short, potentially 15, potentially slow down here at around 1650. So you're going to have a few. The thing with on the short side, you're going to have a few different levels in the way, and it could bounce off any one of them. You just don't know. So maybe in the fact that a high probability setup, it might be struggling. I'm just favouring more the bull side. We'll see who's right there, Peter. If I'm wrong, I guarantee you we won't be talking about it again. All right, LVT. What do we got there? All right. Yeah, this is you can see going back, what do they do? Let me see what they do. So always things like this, checking the chart. If I don't like it too much, if it's got a good story, something looks nice, then yeah, we'll have to just have a look at it. Just read your comment there, Helen. Lauren, falls in love easy, don't you, mate? Nothing wrong with that. No, it's a global technology company, software and services technology, headquartered in Times Square, New York, with offices in Melbourne, London, Richmond, Washington State. Offers digital workplace solutions for the commercial and education markets, and is a Microsoft partner. Okay. Yeah, look, it all sounds flash. I don't think it's I think it's quite a busy space they're working in, so maybe competitive. I don't know without reading it too much, but IT tech. Let's go back. So on that weekly chart, this I don't. There's one thing I don't like, in the fact that it's a clear sign that bulls are not willing to hold. Oh, I've done it again. Bulls are not really willing to hold, and I don't think we worry about the daily too much, but the weekly. Um, Look, there's a lot of arguments on this one. Not arguments, but we could easily argue. I don't mind that. I don't like, it spikes up quite hard. It's come back down, probably about a 60% retracement of this leg up. Then we spike up again. We don't wash out the highs. We don't clear out the highs as much. And it's coming from quite a deep level. Wouldn't have minded if it popped up, chopped around a bit, consolidated just below that resistance, and then blasted through. A lot of the time, that's going to lead to a bigger push up, maybe towards that dollar mark. But instead, we come from quite a low base, straight up through resistance, well, the previous high at 67.5, and then pretty much failed and took out this low at 35, straight back down without really any lower highs. It was just in one foul swoop. Okay. The fact that it did reject 35, and that's a lot of the time they're going to do that when you can see there's a clear sort of a support line through, only a cent or two lower. They can easily trade down there. It's just going to clear out a few more buyers. Anyone that was buying it in here, held it all the way through, held it all the way down, and had their stop below 35, just got cleaned up. And the market can do that more and more, because what it's doing is putting people back on the sidelines as fuel that it's ready to jump back in again. Okay, so you just got to remember, sort of what's happening. Where would you put your stops? Where is it more likely that other people are going to hold a stop if they hold a hard and fast stop, or if they watch a level and alert a level? If that triggers, I'm out. They don't have a hard and fast stop. They might unwind a position if it trades at that low. Um, Either way, that's sort of why those levels can get targeted. Now, if this was a clear support zone, like if that low sort of coincided with this rising support, I wouldn't have expected. If it was bullish, I wouldn't have expected that to break at all. Because as soon as it breaks, then you'd be looking for, if it breaks down through a support like that, then I'd be looking for some sort of bearish move to sell into. But the fact that you would, if it was bullish and buyers are willing to support it and looking for new highs, you really do expect it to trade on the support and potentially get your higher low to work from. So in essence, this is your level around 35 that I'll be looking at if I wanted to buy it. It's not bad, the fact that it's, we're oversold here, we held up, spiked straight up, oversold here. We're in that zone, this level, this sort of trend up, although it is quite choppy and quite volatile, it is still a trend up. It is still that reversion to the mean, although you never want to see this kind of big move from the highs straight back down again. I mean, that could be, if you pop back up, even if we do get a lower high somewhere around 60 and we bought it at 42, say, it's still a bloody good trade on the upside. And you still, even if you're wrong, and it doesnn't take out the highs, so you just be aware of that. Ideally, what I would be looking for here, that's my support zone, and just think that's your rising support. We've come in, let's just take that one step. Let's do this a bit better. Say rising support. So we've come down into that support. We essentially sort of bounced back up. We're about here, say, and we're just edging away back down. That was more rejection than one fair swoop, but we're more coming in here. I want to see that start to hold up and buyers start to edge in a bit earlier, not waiting for that pullback to 35. I want to see them potentially holding up at 37, then maybe a little minor high, low 40 or whatever. And then you get a clear level where if it breaks that off some higher lows, then you're happy to jump in because that's a clear higher low of a potentially key support at 35. Does that make sense there? So that's the way I'd be attacking that. And this move up is potentially all one, part of one move up, even if it falls short at 65 or 60, you know where your risk is and you can take some off the table. Does that make sense? So we'll keep an eye on that one. But that'd be more or less just based around the weekly for me. The daily, you can see that trending down. You want to see that start to lift. You ideally want to see this top price section pop up, sit on the MAs after, at this stage. If we see in that stage on the weekly, pop up and we're holding some high lows on the weekly, and on the daily charts, we're starting to sit on top of the MAs. That's a good sign. That's a good sign. And then sooner or later, as we're buying into it early. We're buying more in the unknown. We're trying to get out. We always want to buy in the unknown because I think your payoff's a lot better and you can minimize your risk. And selling when it becomes known. So when everyone knows about it, what's happening in that share, ideally here, by the time you bought it here, you can see it accelerated. It's pretty clear it's on the rise and it's coming to resistance and the people are going to chase it up and so on. We want to buy a bit earlier than that. Okay, it can be risky, but if you know what price action you're seeing and why it's happening, then I don't think it's that high risk at all. I think it's a lot more realistic, higher probability, and your payouts are going to be a lot better. So at the moment, we're just not seeing that at all. So a bit of work to do still. All right, might have to sorry, Helen, just saw that then. We'll look at NWL because I know I just looked at that before too. I don't mind that. Except again, for me, it's just, I'll show you the way I'm viewing this. I do like that. I don't know why. Let me just look at it again. On the weekly, it's on the rise. There's probably not much data to see. So you can see it pop, pushed up, pull back, push up, pull back. This big push up. So your anchor's really way down at $6. I had the big push up, then we've got to, there's more and more selling, or anyone that probably held that from, I guess, IPO stage. it sort of spike up anywhere around $10. It was selling between 9 and 10. Some more selling, drove it a bit lower. Big spike up again, just above 9. We got some more selling. Okay, you're probably going to be due for a deeper correction, which is that push through 7. But this was all in context of an anchor at around $6 on the 6. But we'll draw that up. So these lows through here are around that $6 mark as your weekly anchor, and you can see all this price action was really still holding above that anchor, and it was really chopping around, And then what we're seeing now is probably a touch hard because you got such a broad range which could easily press up into 9, get some more selling again. But I don't mind the way it's done this, and this was consolidation, and you can see you probably had to clear. Oh, probably not so much there, but even if you bought it on a breakout today, we can't draw straight lines today. A breakout, you're probably up slightly at the moment. If it was 825, we'll be 827 at the moment. All right, we'll draw it up for Lauren anyway then. Yeah, so I don't mind that, and I think if that's your first leg up and we just broken, I'd assume this is your second leg up, which could be taking us to around the $9 mark. See how it goes. All right, guys, a bit of call it a day there. Thank you very much for joining us. Like I said, if you've got any questions, if there's something that you didn't get to ask or a bit more clarification, if you're looking back on this later, if you watch this later, you didn't manage to join us today, but you can watch it later and you want a clarification, just send through an email to support@tradesetup.com.au and I'll get back to you as soon as possible. All right, guys, thank you very much. Let's see how we go tonight and the next couple of days and see what happens on. So we're probably going to have a bit to talk about on Monday, I'd say. Either that or we have nothing and the market's just going down, but we'll see. Yeah, but thanks for joining me, and I'll speak to you again on Monday. Have a good couple of days and have a good weekend. Cheers, guys. Bye.